Hey, my name's James Nicholson. Welcome to my YouTube channel. The Bank of England have got their meeting in a few days, and we've got an update on what the market expectations are on a rate cut. I'm going to tell you what I think they should be doing as well. And one of the major US banks has got a prediction, which I think a lot of you would be really surprised at and quite pleased if this actually comes true. So there's a lot to cover here. It's a busy week as always. If you're new around here and you haven't done, do make sure you subscribe to the channel over there and hit that bell notification. We're going to have all the latest news on the Bank of England meeting, on the Federal Reserve meeting, and everything that's going on in the property market this week. And it will be a busy one. And let's get some more views on this video so people know exactly what's going on. How do we do that? Simple. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm, and that's really helped the channel grow so far. So thank you to everybody that does that. So, the Bank of England. The meeting this week. It's on Thursday the 19th, and it will be at midday as always. And it will be interesting to see what happens here, because Andrew Bailey and other monetary policy members, they've been doing interviews over the last few weeks, and they're talking that rates are going to come down, but maybe not quite yet. And the reason for that is this inflation. It's absolutely been a pain. It's sticky, it's coming back, but what you've got to take into account is the fact that, look, this inflation is not caused by anything that you're doing or what I'm doing. And so often, sometimes in the past, inflation could be caused by consumers going on a mad spending spree. And so they increase interest rates in order to curb spending. The problem with inflation at the moment is its supply side. The inflation that we're seeing at the moment is through energy costs, it's through the national insurance going up, it's through wages going up due to national insurance going up, and it's due to service businesses increasing their costs because their costs have been going up. And so the Bank of England has a bit of a problem. Now, tomorrow, we will be getting some more inflation data, and it's expected that inflation will creep up a little bit. So right now, the Bank of England rate is at 4.25%, and it's likely that we'll stick with that. In fact, the market is saying pretty much 100% we will not get any cut this month. No cut. But there is some good news in that. So the markets do expect an interest rate cut fairly soon. And what we're looking at is an August cut. So not miles away, but not quite as soon as what you might hope for or what I would hope for. But we have potentially got some interest rates coming down. The mortgage rate, I'm going to talk to you about that. Your mortgage rate might get cheaper before even August. So the expectations on the markets are that by Christmas, the base rate will be 3.75%. So half a percentage point down on where we are now. So that would be 0.25% rate cuts. That's what the majority of people think. But there's one bank that really stands out on their own, and that's Morgan Stanley. And so Morgan Stanley are saying that they feel that the UK economy is so bad and the jobs data is so bad that you're going to see significantly more cuts and maybe some bigger cuts in order to get, in their opinion, down to 3.25% by Xmas. That's a big drop. That's another full percentage cut. So that means you're either going to get 4 cuts of 0.25%, or you might get some big 0.5 percentage cuts. It'd be interesting to see, because the job data isn't great. Unemployment is rising in the UK, and Andrew Bailey has talked in the last week or so where he said, we aren't just looking at inflation data anymore. We're going to be looking at unemployment data. We're going to look at the economy, and we're going to look at the inflation data, and also we've got to consider what impact this tariff war has, this global trade war that Donald Trump started. Is that going to increase inflation or slow down the economy? So there's 3 factors that Andrew Bailey is looking at, whereas normally they're just focused on inflation, but they understand that the interest rates aren't going to have a massive impact on inflation as it stands at the moment. So what do the markets also see with swap rates? So a swap rate is a rate that your bank borrow at. So you would borrow from HSBC, NatWest, or someone like that. And those are looking positive. They started going back up in May. And so prior to May, April, May, we saw lots of banks cutting rates. We were doing rate cut videos every day nearly at one stage. And rates with all the big lenders got below 4%. But recently, they've started creeping up. But that has now changed. So what are the swap rates at the moment? So this is the SONIA swap. And so this is what, basically this is a prediction of where the Bank of England are going to end up with rates. And so this is what lenders lend to normal lenders at. And so there's a 5-year deal at the moment. So this is how much your bank can borrow money at. Sits at 3.67%, which is better. That went above 4% at the end of May temporarily. So this is good. And what we expect from this is to start seeing some mortgage lenders cutting rates in the next week, regardless of what the Bank of England do. And that's what we want to see. We want to start seeing rate cuts, even if the bank don't, because the market is slowing down. So they want to get this market moving again by cutting rates. That will get some more purchases done. The 2-year deal at the moment is at 3.65%. And so that's moving in the right direction as well. And that gives banks opportunity to cut rates to people like you and I. Did a video on Rightmove in the last few days, and they are seeing record listings at the moment. So their listings year on year are 11% up, meaning people selling their properties is up year on year 11%. That's a lot. And that's, I think, a 14-year high, which is quite considerable. But buyers are up as well, but not as much. There are 3% more buyers at the moment. So what we need to happen is something to bring in more buyers into the market. Otherwise, those 11% extra listings, it's likely that those prices would drop in order to get a sale. But if interest rate drops and lenders start cutting rates maybe to 3.75%, you would see some people coming into the market because they would be able to borrow more, or they would just feel now's the right time in order to get the house that they want, and that could get the market moving again. That's what happened last summer. So what do you think is going to happen this week? Do you think the Bank of England are going to cut, or do you think they're going to hold? Let me know in the comments below. Do make sure you smash like, do subscribe, and make sure you check out all the other content as well on the channel, including this video right here.